If you've been actively trading crypto over the last few days, your portfolio has likely taken some damage. Choppy, sideways price action is designed to trigger fakeouts, grinding down your trading capital by moving in no clear direction at all. Right now, the crypto market is violently tossing back and forth without a clear heading. Historically, these tight ranges resolve when massive volume re-enters the order books. With the U.S. stock market opening in less than 24 hours, we're approaching the single largest influx of traditional liquidity of the week, the exact catalyst required to force a definitive break from this local turbulence. This diagram illustrates Bitcoin's current trap. The price is wedged tightly between two structural boundaries, an ironclad support floor at 65,500 and a heavy resistance ceiling resting right at 69,500. Because the price has been stuck here, market makers have built up massive clusters of liquidity just slightly above and below these lines. A liquidity sweep happens when the price intentionally surges past a boundary to trigger all those pending orders before it decides to reverse or continue. Zooming out to the weekly timeframe, the macro trend remains heavily bearish, confirmed by a red supertrend indicator. What we are experiencing in this tight daily range is simply a temporary oversold relief bounce against that larger downward pressure. This sets up two distinct scenarios for the traditional market open. A strong stock market open will push Bitcoin upward to sweep the liquidity sitting above 69,500. A weak open will drag Bitcoin down to absorb the heavy volume resting below 65,500. Guessing which way the stock market will open is a pure mathematical gamble. True edge comes from letting the U.S. market make the first move, watching Bitcoin sweep the liquidity, and only then entering a position based on the confirmed trend. Beneath Bitcoin's neutral sideways movement, massive structural fractures are secretly forming across the altcoin market. Individual assets are preparing for wildly different outcomes. On Ethereum's chart, notice the three-dip pattern forming atop a support base between 2010 and 2030. This inverse head and shoulders is a bullish formation. To reverse, Ethereum needs a clean break through the 2200 neckline, holding above it to confirm a true breakout. Executing these conditional breakout trades requires a platform built for precision. If you use the link in the description to trade on BingX, you'll capture exclusive VIP partner bonuses and unlock direct mentoring access, giving you an immediate advantage while trading these specific setups. But while Ethereum is building a launchpad, XRP is actively flashing a devastating warning signal that threatens retail buyers stepping in too early. This chart compares XRP's price against its relative strength index. The top price forms higher lows, but the bottom momentum indicator breaks below its baseline, invalidating bullish divergence. If XRP's $30 support fails, the floor gives out, risking a cascade below $1. Professional traders do not panic during a collapse. They use short positions to borrow and sell an asset they expect to drop, buying it back later at a lower price. This strategy allows you to extract consistent profit from the exact downward cascades that wipe out beginners. When Ethereum shows a bullish setup and XRP threatens a massive breakdown, blind ecosystem buying is a mistake. The crypto market is temporarily fractured, making asset-specific tactical execution mandatory. We can see this paralysis extending across the broader market. Solana's Belief Relief rally is already running out of momentum, completely failing to break through its local resistance between $95 and $105. Chainlink is similarly trapped, paralyzed in a tight sideways channel, and repeatedly bouncing between its immediate support and resistance bands over the last 2 months. These altcoins are hopelessly chained to the central machine. Whichever macroeconomic momentum Bitcoin establishes next will force the rotational direction of the entire market. This brings us to the single most important rule for the week ahead. You must absolutely refuse to front-run the traditional stock market open. Trade activation follows a strict hierarchy. First, the stock market provides volume. Second, Bitcoin identifies the liquidity sweep direction. Third, altcoin signals become actionable. Confirm a breakout, execute Ethereum long positions. Confirm a breakdown, execute XRP short positions. Understanding this macro strategy is useless without precise tactical timing for your entry. Click the video on your screen right now, and I'll walk you through a foolproof entry trigger system to time these exact moves perfectly.